Hi Mortgage Heroes, I'm Andy, and this is Monday Mortgage Minute. Nothing dominated the mortgage real estate space more last week than the proposed loan level pricing adjustment program that would charge loan applicants with better credit scores and larger down payments a higher fee than those with lower down payments and lower credit scores. Essentially an inversion of responsible personal credit strength and large down payments. When this came out, the entire industry turned its focus 100% on this topic in what is essentially loan level price adjustments that negatively impact borrowers with higher credit scores compared to lower credit scores. Under the new rule, high credit score borrowers with scores ranging from 680 and above will see an increase in the cost to deliver a mortgage to Fannie Mae. Understand this fee is passed on to borrowers, not absorbed by the market. These new credit score ranges make some before and after comparisons pretty tough to swallow if you're a borrower with above 680 credit and more than 15% down payment in hand. Without overburdening you with the nuances of the details, the overarching takeaway here is that they're attempting to even out the cost to deliver loans to Fannie Mae across the spectrum of applicants based on credit score, which in short means it will cost less to deliver a loan to them if the borrower has a qualifying score below 680, and it will cost more to deliver a loan to them if the borrower has a credit score above 680. This is only for conventional loans, so unless otherwise noted, FHA, VA are excluded from these pricing adjustments. Some of you may remember that during the refinance heyday just a few years ago, there was a pricing adjustment added to every person doing a conventional refinance based on what their loan-to-value ratio was and the type of home. Ultimately, this was a penalty imposed on the homeowner for refinancing their property for better terms, a lower rate, and during a time when, by the way, the Fed was buying billions of dollars of mortgage-backed securities. And in the end, the entire industry knew it was just a cash grab on homeowners trying to advance their personal financial position. So why am I mentioning this? I'm mentioning this because, once again, you're having an agency-imposed fee structure placed upon people who are responsible in order to shore up their coffers at the expense of those same people. No matter where you lie in disliking or liking this program, looking back at other similar program changes like this, they were eventually rescinded or reversed due to unpopularity, illegality, or industry pressure. Expect that this will be the same in the weeks and months to come. As there are new changes and new details emerge about how this will impact borrowers, we will of course let you know. With that, here's what to look for this week. On Tuesday, we get the consumer confidence reading, and we're hoping that this will be a positive reading because 2 weeks ago, consumer sentiment was good, so there's no reason this should be any different. But over the course of time, we are going to probably see consumer confidence get weaker as the Fed continues to fight inflation. On Thursday, we'll have the advanced GDP reading and unemployment claims, both of which are going to be looked at very carefully by the markets to determine if we're making progress against sustained high inflation. Friday is the important day this week. Core PCE. This is the Fed's favorite reading to gauge their success or struggle with inflation. I'm personally expecting this to be at or below the projection of 0.3%. And man, I really hope it is. So what does this all mean for mortgage rates, Andy? Mortgage rates continue to bounce around within their recent highs and lows with no breakout for the higher or lower definitively. As I've stated before, when there's wild uncertainty, you have to stay on your toes and be closely connected with your loan officer so that you can lock on a day when the rates take a dip and you can snag that lower on the day rate. Let us know how we can help you win in mortgage and real estate. Thanks again for tuning in to Monday Mortgage Minute. Remember to subscribe to this channel and also check out the Mortgage Heroes Weekly Podcast on YouTube, Apple, or Google podcast platforms. And we'll see you again next week.